Welcome back. Hope you're having a good morning. Well, let's get to some fundamental analysis on all the stocks we just discussed for you. Dipan Mehta, Director, Elixir Equities, joins us on the show. Hi, Dipan. Good morning. Good to see you, Ben. Well, on Sun Pharma, there was some negative news flow that came in with regard to their Dadra facility. What's your view on the stock at these levels?
Good morning, Nigel, and thank you for having me on your show. I think it's a minor setback, and the company has been able to navigate such issues pretty well in the past. So I'm sure that remedial measures will be taken. But the more important thing is that Sun Pharma is following a completely different trajectory as compared to some of the other pharma companies. And its focus on specialty products is going to be a game changer for the company. And eventually, I think it will result in very strong revenues and profits, I would say sustainable and higher valuations as well. But we need to wait to maybe a soft FY 24-25 as they invest more and more in specialty chemicals through higher R&D spends. Valuations are reasonable, but I think that this is one stock that one should keep in the portfolio for a long period of time. It will provide safety as well as defense in the event of any turmoil in the market. Having said that, it's a company in which we and our clients are invested in as a measure of disclosure.
Okay, Dipan, hi, good morning. The stocks that we're watching very closely are the banks, right? I mean, Kotak Mahindra Bank has been upgraded this morning by Macquarie. HDFC Bank is up almost 15% in the last 1 month. You think the time has come to load up further on private sector banks? And if yes, what does your pecking order look like?
Good morning, Sonia. You know, every day I look at the PE multiples of all the companies. And when you come to the conclusion that the cheapest category is the private sector banks, of course, PSU banks are even cheaper, but the cheapest category of stocks is the private sector banks. They are trading at PE multiple price to book lower than what their averages have been for the past 5-10 years. Yet growth rates are still pretty much intact. For example, a private sector bank can grow at 15-17% easily, and their valuation is anywhere between 13 to 20 times or so. So from that point of view, there's valuation comfort and there's good earning visibility as well. And in overvalued markets like this, investors are looking for cheap stocks, and that's where private sector banks play an important role. So very, very positive on all private sector banks. You can pick and choose, I think, whether it's Kotak, IndusInd, Axis, ICICI, I think all of them should do well. Our personal favorite is ICICI Bank and IndusInd Bank, purely on account of the growth dynamics, the quality of leadership, tech platform, and the basic franchise and customer branding. So I would say that you should be overweight banks. Maybe the next leg of this bull market upswing could be led by the banks, and one should be very cognizant of that.
Okay. All right, Dipan, hi, good morning. Thoughts on Vodafone Idea, given that we had this massive deal yesterday, and I think there's a lot of speculation around now what will the parent do with all the money? Will some of it be infused back into the Indian entity or not? So that's one aspect of it. The other is the ground reality, right? We also had the telecom subscriber data come in yesterday, and Vodafone is still, of course, losing subscribers till that confidence really comes back. Stock has done well, of course, if you got the trade at the right time. But what now?
See, I think stocks like Vodafone are good in bull markets like this. It's low priced, attracts a lot of traders, huge volumes take place. But what are the underlying fundamentals? I think last when I saw the company, unless it grows its revenues by 40-50%, it can't even look at breaking even. Of course, cost may go down because of further equity dilution and conversion of debt into equity. But it's not a very positive figure for Vodafone. The equity is going to be so bloated that servicing it in the future is going to be a big, big challenge. And one cannot really value this company based on price to earnings multiple, like the way you do for Bharti Airtel or for Jio. So I would say that it's a great trading story. It keeps coming in the news because of something or the other. But end of the day, on a fundamental basis, hand on heart, we cannot recommend buying Vodafone.
Yeah, all right. Dipan, I wanted to ask you about Maruti Suzuki. The last couple of days, the stock is down close to 6%. I'm sure what's taken place, but I think last 2 or 3 sessions, it's lost 6.5%. Your view on the counter, will you look to buy the dip?
No, Nigel, I think just wait and watch. There'll be a lot of frenzy around Hyundai's IPO and IPO listing as well. And some amount of holdings, core holdings may shift from Maruti to Hyundai as well. Hyundai has on certain parameters is better than Maruti. The fact that its market share is slightly lower, to that extent it has got space to take it higher. And I think some amount of lull is coming in auto sales as well. We saw that with the FADA figures as well. So one could expect 2-3 soft quarters for the entire auto industry, Maruti in particular as well. But look, the long-term story is pretty much intact. And all from Maruti, all we can expect is, what is the strategy for EVs? And if that is, something which the market likes, then that could be a trigger point. But nonetheless, I think it's a good secular growth story. Uncertainties around parent company and merger of the Gujarat plant, all those are well behind us. And it has got some phenomenal strength in the market. But as I said, one should expect a few soft quarters for Maruti and the entire auto industry.
Okay. The other space I wanted to ask you about was some of these consumption stocks, right? I mean, we've seen a big comeback, whether it's in names like D-Mart, names like Varun Beverages, both sitting at fresh highs despite really steep valuations. What do you think is happening here? Is there a next leg of an upcycle that's due in these names?
See, Sonia, whenever a highly priced, highly valued stock is going up, all I can interpret, and this is my theory, mind you, is that existing fund managers are buying the same stock they're already invested in. Because fresh ideas in this market are extremely difficult and rare. So if you're doing a portfolio management scheme or you have a small mid-cap fund, you get fresh money in, what do? You buy the same stock. And stocks like Varun Beverages and D-Mart, they have hardly any liquidity. So, 1-2 lakh shares also, if you buy of a company like this, can take the stock price up by 3-4%, 5% in markets like this. And then once you see a stock going up by 2-3%, automatically the day traders and the speculators come into play as well. So highly priced stocks are moving up just because of that. On a fundamental basis, you cannot be buying a stock at 100 P multiple, especially if it's a physical business like Vodafone Beverages or D-Mart. These companies have constraints when it comes to growth rates. They cannot grow at 40-50% on a long period of time. So you need to be a bit careful and not get drawn into buying such high valued stocks. I mean, we discussed banks. I think banks, software companies, pharma companies, PSU banks. I think these are the sort of areas where valuations are just about on the higher side. They are not crazy valuations as of now. That's why I think fresh money should be put, if at all you want to put into fresh money. But our advice is to try and gradually increase the cash levels in the portfolio.
Okay. Got it. 2 mid-caps, and these are old companies that have been listed for a long, long time. But I wanted to, check with you. One is TTK Prestige, and the other is Gokuldas Exports, and both are in news today. TTK Prestige because they're apparently getting a global consultant to now come up with the 5-year growth plan. Stock on a longer time frame has been an underperformer. It hasn't done much. I mean, if you look at the last, let's say, 2-3 years. And ditto for Gokuldas, one of the biggest exporters, apparel exporters out of India. They are, of course, looking at an acquisition. Any thoughts on these two?
See, I think TTK Prestige is fairly valued, but growth rates also have slowed down and competitive intensity in their categories has increased significantly. But look, it can grow at 10-12% on an extended basis for several years or so. So if you're an investor, I would remain invested. Gokuldas Exports, on the other hand, is something which I have on my market watch screen. And I think that it's got a very strong position. The acquisition, I think, in the UAE was very positive for the company, and it was in the limelight a few months ago, but it has cooled off now. I think at the right price point, when it's available at a reasonable P multiple, this could be a good addition to any investor's portfolio. End of the day, I think that they're going to only increase their footprint globally. And as and when I think, this overall economies in US, Europe, and overall consumption picks up over there, companies like Gokuldas Exports will really benefit. And more, I think the large retailers want to work with large Indian companies. There's also a China plus one or Bangladesh plus one kind of strategy playing out over here. And I would say exceptional management from Gokuldas to make such a huge success in a very difficult industry. So it's on my watch list, and at reasonable valuations, at a correction, 15-20% type of a correction in a market where I think would be in a slightly corrective market, would be a good strategy for Gokuldas.
Oh, okay. Just to point out, in the news on Gokuldas, they are subscribing into BFRL through optionally convertible debentures, and it's going to happen in tranches up to 350 crores. And then by June of next year, the company could take a call on a complete all-out acquisition of that entity as well. So it's interesting. We'll try and touch base with the company as well as we go along. But
Dipan, I wanted your thoughts on M&M because the market cap of M&M has now reached almost 3.7 lakh crores. And, the stock has already gone up 71% this year. Do you think the run is done here, or given that we have a positive monsoon situation upon us, maybe there could be more upsides in names like M&M?
So Sonia, first of all, excellent interview with Anisha. I've been watching it on the show. He was really very positive and was able to communicate M&M strategy really well. I think that not only has the company done well, but on the investor relations front and explaining their strategies, they have done exceptionally well as well. This is one stock you should be overweight within the auto space. I think that it may outperform Maruti as well. Its growth rates are higher. Its product strategy is better. It's got a coherent EV or model ecosystem as well. And valuations which were earlier quite attractive now are at industry levels. And the most important thing in M&M is it is very agro focused. With good monsoons, increased impetus to agriculture and NDA 3, this is one company which can do very well. Not only is the farm equipment, of course, totally dependent on on the agriculture sector, but a lot of the UV sales, especially lower end UV and SUV sales, are in the rural sector, and they have a superb distribution bandwidth within the semi-urban and the rural area. So very positive on M&M. Again, the disclosure required over here.